Hi guys, I'm Rich. Let's go through my top 5 things to watch for the week ahead in markets. Number 1, US PCE. Over a busy data schedule, the main focus this week will undoubtedly be the latest US PCE data. Given the data's importance within the Fed's own true inflation calculation, the data holds the potential to drive plenty of volatility across financial markets this week. Over the last week, expectations have built up in favour of a further 0.25% Fed rate next month. However, should PCE data drop materially below expectations, this might see a scaling back of those expectations, creating plenty of two-way risk in the data. Number 2, US GDP. Given the growing focus on recessionary risks later in the year, the latest quarterly US GDP print will be a major focus point for traders this week. Markets have begun pricing in rate cuts later in the year in the line with the expected downturn in growth. And, as such, should this week's GDP reflect a slowing of activity, we can expect this theme to intensify, likely weighing on US dollar in the short term. Number 3, German prelim CPI. The latest advanced look at German CPI will be a key input for Euro traders this week. With hawkish ECB expectations still very much alive ahead of the May meeting, this week's data will be seen as an early gauge of likely overall Eurozone CPI. Lagarde has made clear her intentions to press ahead with further tightening, meaning it would likely take some significant cooling in CPI to cause the market to scale back its ECB expectations. Number 4, BOJ meeting. This week marks the first BOJ meeting under new Governor Ueda Kazu. While expectations are aligned broadly in favour of no action being taken at this meeting, traders will be keen to hear the first official outlook and assessment from the new BOJ head, as well as the bank's latest forward guidance. Some players are highlighting upside risks into the meeting, however, with a potential yield curve target tweak flagged as possible surprise for traders. Number 5, Australian CPI. We also have the latest Aussie inflation figures on deck this week. Despite the RBA pausing its tightening operations last month, the latest RBA meeting minutes showed that the bank remains highly concerned about inflation and stands ready to tighten again if needed. As such, a weak print this week should downplay tightening risks leading Australian dollar lower, while a hot reading will bolster fresh tightening expectations, leading to Australian dollar higher near term. As always, you can click on the link in the description just below to see the full economic calendar with the previous month's data and the consensus expectation for this time. But for now, thanks everyone, good luck trading this week, and remember to give a quick smash of that like button and hit subscribe so you don't miss more content like this when it's released.